You will not time the top of the crypto markets, even if you have experience. Maybe you'll be part of the 1% that gets lucky and times the top, but for the most part, that is not the case. And if you're relatively new to crypto, we are going to cover something that takes many years to really understand, and you're going to get it all in this one short video. This might be one of the most important videos I've ever made, so please pay close attention. We are going to cover how the crypto markets work, and also how to practice risk management. And if that sounds good to you, make sure to hit the like button. It really helps support the channel. And with that being said, let's get into the content. Getting right into it, we're going to cover how someone views the crypto markets from the time that they get in as a beginner and how it progresses over time. So when someone gets into the crypto market, this is how they think it works. The crypto market goes up, and then it comes right back down. And many of you watching understand that this is not how it works. A lot of you guys are more experienced. So then you start to realize as time goes on that the crypto market goes up, it pulls back, goes up, pulls back, goes up, and then eventually it will come down. And something important to note that you will start to pick up as you get more involved in crypto is that every time one of these dips happen, it doesn't mean that it's gonna go right back up. That might be the end of the market, right? We just see the full picture here. But in real time, it will look something like this. For all we know, that might be the end of the market. But what you start to understand as you get into this space is that if it reaches the top, it will not go straight up. So let's say we get to a top. However we get there, it will be a rocky road. It will go up, pull back, up, pull back, up, pull back. And this chart I'm making is just very neat. In reality, it might look something like this, right? Go up, then trend sideways, then go up, huge crash, up and down. Pretty much to get to the top, let's say this is the top, it's not going to be a straight line. It's going to have a lot of roads ahead, roadblocks, and we understand that by now already. We covered, 1 or 2 years of crypto, right? So if you're relatively new to crypto, you already skipped a year or two. So then this is how we start to think the crypto markets work as we get more involved in crypto, right? So we understand there's going to be ups and downs and pullbacks, ups and downs, and then it's going to get to the top, right? And then at the top, it's going to go like this for a little bit, and then it's going to come crashing down. So at least we have all this time here to time the top, right? Easy, simple, right? Well, you start to practice this and then you'll realize this is not how it works either. Well, how does it really work? All right, so you progress over further and further and you understand that you go up and down, whatever it is, it's a rocky road, you get to the top, and instead of it rounding off here, instead, it comes right down, right? Maybe if we're talking about Bitcoin, it might be 20 or 30%. It is very rare that this would come straight down like this. That would happen to a coin maybe that has a very small market cap, or maybe to a coin that's having a rug pull. But when it comes to something like Bitcoin, after it comes down, it's gonna do something. For all we know, it might go right back up and continue the cycle. Or it might go up and give us hope and come back down. Or it might go sideways for some time and then go back up, or go sideways for some time and then come back down. But the bottom line is it's not just gonna go up and come back down. Both ways, it's gonna be a very rocky road. And let's say we're using this chart as an example, right? As we can see, we go up and down, rocky road. There are many peaks here. This is one peak, here's another peak, here's another peak, here's another peak. For all we know in real time when we're in that moment, that might be the top of the crypto market. We simply do not know. Right now, we're in this specific crypto market and we've had a few pullbacks already. We went to about 60,000. So let's just say we're doing this chart here and this is, our 60,000, right? And we came down. For all we know, this might be the actual top, but it can continue going up. We simply do not know. And timing even these peaks is very difficult, right? Let's say this is the actual top here. Even timing these peaks is very difficult. So now, if we take it a step further, if we're trying to time the actual peak, it is extremely rare and difficult. 1% of people might get it. Our best bet for timing markets is catching it near the peak, because we simply will not catch the top of the actual peak. So let's say we have this chart here, right? This is what we're working with. Our best bet is trying to time these peaks. But even these peaks, as I mentioned, is very hard. Usually you don't even realize it until it comes down. So in reality, this is the time where people actually catch near the peak. You won't catch the top of the peak. And also people get frustrated because sometimes they'll get close to the peak, but they'll never really get exactly on the peak. Maybe let's say this is the peak on the run up, they sell here, and then it continues to pump and they are mad that they missed out on more gains. Or maybe over here, as it's coming down, they get out here, right? So that, I guess, would be the ideal situation. The bottom line here is that you cannot time the market. Well, I'm telling you all this for what, right? What's the whole point of this video? Well, I'm not simply going to tell you how the market works without telling you a reason behind it. There are things that we can practice. The first thing that I do is I make two portfolios. I have the investment portfolio and I have the trading portfolio. The investment portfolio for me is mostly Bitcoin, meaning I'm in it for the long term, 10, 20 years. And I simply look, will Bitcoin be worth more in 10 or 20 years than it is today? And my answer is yes. I think Bitcoin will be at least $500,000 in 10 years. So when it comes to that Bitcoin, I set it aside. I'm not trading it anyway. This already makes things easier for me mentally. It helps me sleep at night. I'm not thinking, is this the peak? Is this the bottom? I'm just simply thinking, I'm holding this for 10, 20 years. I'm not going to trade it anyway. Then we have the other portfolio, the trading portfolio. And then even within the trading portfolio, you can separate the high risk coins and the low risk coins. And this is really what I will focus on in terms of catching peaks and dips. But still, we have this portfolio here. It doesn't make things easier. This doesn't just help us now go ahead and say we're going to time the market. And because we cannot time the market, what I do to get into crypto is I dollar cost average. So instead of, for example, putting in $1,000 in one day, I would put $100 over 10 days. And I do the same thing when I get out, right? Instead of taking out $10,000 in one day, I might take out $1,000 over 10 days because again, you cannot time the market, right? I want to show you this one more time, right? Let's say we're not dollar cost averaging. You never know what's going to happen, right? Let's say we have this chart and then we get to right here. This is where we are in real time, right? And you want to sell your crypto. If I sell all my crypto and this thing dips, I might be happy right here, and then it continues to skyrocket. I'm going to be very upset because I got rid of my whole entire position. So when you dollar cost average out, at least you know you're getting some profit, but you're also leaving some room for you to make money because you never know what the next step will be. Let's say in this case, I only sold a portion and then I rode this up here. I'm happy. But then it really crashes. At least I knew at some point I took a profit. You simply cannot time markets. It's all about probabilities and risk management. If you want to take more risk, right, you can take bigger bets in the short term. But I like to dollar cost average in, and I like to dollar cost average out. And also what's very important is that the money you are trading with, understand how much you are willing to lose. Because for some people, if they lose $5,000, they won't know what to do next, right? They're going to be very lost. And then there are people that have portfolios worth $100,000. And if they lose $5,000, it's not a big deal. They go to sleep at night, no anxiety. So you have to understand for your personal situation, what is the best method. So to recap on the risk management, there's investment versus trading, right? Set aside a portfolio that is for the long term. That takes off some of that mental pressure. And then you have the trading portfolio, and even within the trading portfolio, there's the high risk coins and the low risk coins. And then for me, at least, you don't have to follow these methods. This is the way I do it: dollar cost average in and dollar cost average out. Because as much as I'm into crypto, I pay attention to it every day. I, along with everyone else, we're simply not going to time the top. So dollar cost average is the method I use. And then number 3, of course, how much can you afford to lose, right? You might set aside the investment portfolio and the trading portfolio, and you might lose the whole entire portfolio whatsoever. Can you really manage that, right? That's where everyone's gonna have a different situation. Like I said, for some people, even $100, they can't stomach that, right? They're not gonna be able to go to sleep. And then there are people that have $500,000 that can afford to lose $100,000. So everyone will be in their own unique situation. And I want to state again, as much as you think you will time the top of the market, you will not. And if you do, right, it is possible. You might be part of the 1% that does it. It's a very rare scenario, right? So we can't say to go out there and say that I timed it, so I'm gonna teach you how to time it, because everyone's gonna be in a different situation. It's all about probabilities and risk management. And I wanna know what your methods are down below. Maybe I covered something that is totally different from the way that you view the market, and I would love to learn what you guys do as well, because this is just what I do, but I always like to learn things from you guys and incorporate it into my method. So please put those comments down below, like the video, subscribe to the channel. Thank you for listening, and I'll see you next time.